A holiday season of ordering gifts mostly online during the pandemic really provided a jolt to UPS in the fourth quarter. The delivery giant trounced Wall Street profit estimates this morning and beat analyst projections in each of its business segments. Let's dive into the quarter now with UPS CEO Carol Tome. Carol, good to see you this morning. Thanks for taking the time. I know you're just off your earnings call. Really big quarter from UPS here. What do you think the big takeaway for investors should be?
Well, Brian, it's such a pleasure to join you today. Thanks for asking me on. I think this quarter was proof positive of our better, not bigger strategy, where we saw our revenue growth exceed our average daily volume growth.
In that U.S. domestic growth up 17.4%, really driven by a lot of people buying gifts online during the e-commerce season. How sustainable is growth like that as we venture back out into the wild later this year when we get the vaccine?
Yeah, there's been a step change in the demand patterns, with e-commerce sales now reaching about 21% of total retail sales. We don't think that's going to change as we look forward. So we would expect to see continued penetration in our B2C business. But we are looking forward to the economy recovering at some point, particularly as the vaccines roll out. And we would expect our commercial business to start to show improvement in 21 as well.
Carol, as you know, I was no stranger to listening to your earnings calls when you were at Home Depot, when you were the CFO at Home Depot, and you would always share a GDP outlook. What do you think GDP looks like this year, and how do you think small businesses do inside of that estimate?
Yeah, it's a bit like walking on jello, isn't it? The forecast for GDP for the United States is a little under 5%, but it's so highly dependent on the rollout of the vaccines and the control of the pandemic. Now, what we're trying to do here at UPS is to provide the best value for the customers who have demand, and there are a lot of customers who do have demand. So we're leaning to that experience in a big way, improving our time in transit and eliminating friction in doing business with UPS.
How would you grade the health of small business right now?
I think it's mixed. We've seen so many people lose jobs, so many small businesses close. But for those businesses who've been able to reinvent themselves, they're actually doing pretty well. And you can see that if you look at the growth of platforms like Stamps.com and Shopify and eBay and others. We have a digital access program that leans into these platform businesses in a big way. And we've seen tremendous growth in this space in 2020, and we're expecting continued growth in 2021. In fact, we think revenues on our DAP platform will exceed $1 billion in 2021.
Carol, I was just going through this quarter in the U.S. and international, but really in the U.S., I didn't get the sense that the U.S. consumer, maybe they don't need a new stimulus plan. Do you think consumers need that extra stimulus check? Just based on your results here, maybe they don't need it.
Well, Brian, it's tricky, isn't it? Because if we look at savings rates in the United States, we see that savings rates are actually up. So many people don't need the stimulus package. And yet we know that we have a problem in our country with many who do. There's a big food insecurity challenge facing our country. So we're counting on this administration to do the right thing to get the country moving again.
Speaking of administration, I remember just a couple weeks ago when that first UPS truck started leaving with the COVID-19 vaccines. Where are you at with building out your network to handle President Biden looking to get 100 million people vaccinated within his first 100 days?
Well, we've been in the healthcare logistics business for 15 years. And we know cold chain logistics better than anybody else. We've actually created a network within our network to handle the delivery of vaccines. And it's a very complicated delivery, as you know. But we're pleased with how we're performing. In fact, we've had about 225,000 shipments, about 36.5 million vaccines have been delivered by UPS, and our service levels are 99.99%.
This year, you outlined $4 billion in CapEx, and I want to dig more into that towards the end. But how much of that investment will be to support support the vaccine rollout?
So we've already invested in the capabilities that we need for the vaccine rollout. We've stood up command centers. We have 2 freezer farms, one in Kentucky, one in the Netherlands. We've introduced new technology, which we called UPS Premium, which is a labeling that we can puts on the package that we can track the package along the supply chain. So we don't need a lot of incremental investments to support the vaccines because we've been preparing for this. But as we look at the $4 billion of capital that we've allocated for 2021, about 40% of that is for just maintenance spending. About 50% of that is for growth, and that includes growth in the United States, outside of the United States, and in healthcare broadly, not just for vaccines, but in healthcare logistics broadly.
Carol, you've wasted no time really shaking up UPS. A couple days ago, you announced the sale of UPS Freight for $800 million. Talk to us about the cultural change inside the company, but also, too, the financial change. When you sell a business of that size, to me, it suggests you really have a good shot of really expanding your profit margins this year and next year.
So this is really a pivotal time for our company, and it's an exciting time to be part of UPS. I was on the board for a long, long time. I joined the UPS board back in 2003. And what I learned when I came into the company is that UPSers, well, they are amazing men and women who take on any challenge. When you think about the challenges faced against UPSers as essential workers in 2020, well, I just give a huge shout out to the men and women who every day got up, put on their uniforms, they sorted and delivered packages. They were essential workers. But it's also an opportunity for us to really rethink our business model. This year is our 114th year as a company. What got us here isn't going to get us to where we need to be. Our competitors are changing, our customers are changing, and the rate of change is accelerating. So we're leaning into that change. And one of the changes was to look at the portfolio of assets that we owned to determine whether or not those assets were important to us for our future. I've known the UPS Freight business since we acquired it back in 2005. It was a company called Overnight at the time of acquisition. And from that moment, I'm like, I wonder how good a fit this is. And in fact, we impaired the asset shortly after the acquisition. I'm like, I wonder what kind of a fit this is. And as I came on board and really took a look at it, I'm like, gosh, this is a low margin, highly capital intensive business that we don't need to own to provide the solution for our customer. We can do that through a commercial relationship. So we went out to see if this asset would be worth more to someone than it is to us, and we found that with TFI. And so we're delighted to have reached agreement to sell UPS Freight to TFI. This is good news, not only for UPS, but also for our UPS Freight employees, because now they're now joining a bigger LTL company. So I'm excited what it means for them from a career development perspective.
Are you done selling assets? I was talking to a couple of my buddies on the street, and you have an investor day coming up later this year where a lot of folks, I think, are expecting you to come out with longer term targets. Will that include will UPS be smaller? Is that part of your plan?
So when I came on board in June, I sat down with the leadership team and we agreed on the things that would not change. And we landed on 5 key principles: our values, our commitment to our investment grade rating, our brand relevance, our dividend, and the importance of our dual class employee-owned shareholder base. We said those things won't change, which means everything else in the company is under review. It wouldn't be appropriate for me to talk about future asset acquisitions or divestitures, but everything else is under review. Now, to your question about our investor conference, we will have an investor conference on June 9th, and it's our intent to lay out our longer-term financial objectives as well as the actions that we will take to deliver those objectives.
Well, I am looking forward to talking to you around that event, Carol. And full and fair disclosure for me before I let you go, I actually had to write, and you can't see my notes. I wrote on my page, do not ask Carol about the outlook for gross margins on power tools and roofing granulars, because as you know, we always used to talk at Home Depot. So I had to remind myself not to do this in that particular interview. But you probably could give me an outlook if you wanted to.
Well, I'm so proud of the
do
Home Depot
appreciate the
team. They're
time.
just knocking it out of the park. They're just it's a great company, and love them to death. Love my new UPSer family too. I'm
All
really
right.
blessed
Well,
to have worked with such amazing companies.
well, it's good to see what you're doing there. We'll leave it there. UPS CEO Carol Tome, good to see you. Stay safe and keep getting those vaccines out.